Question 3A, XYZ Limited. So this is a combined leverage problem, right? Okay. XYZ Limited sells 2000 units of rupees 10 each, variable cost of rupees 7 and fixed cost of rupees 1000. The company raised the required funds by issue of 100 10% debentures. The company raised the required fund by issue of 100 10% debentures at 100 each. So how many debentures are issued? 100 debentures. What is the price per debenture? 100. So total capital raised is how much? 100 into 100, that is 10,000. Are we able to conclude this? So total debt capital which is raised, is 10,000, that is 100 per debenture into number of debentures. Are we all good? Next. Then you have 2000 equity shares at 10 rupees. So how much is the capital through equity? 2000 into 10, so that would be 20,000. So total capital raised is how much, my dear? 30,000. I'm not starting the problem, I'm just making a note so that once we go back to the problem, we do not have to understand this again. The sales of XYZ are expected to increase by 20%. Assume tax rate of the company is 50%. You are required to calculate the impact of increase in the sales on earning per share. Right? Are we all good? Okay. Let's calculate. Question 3A. There is only one company. Okay. Again, use the same format because combined leverage means you have to go up to EAT for equity. Selling price is how much? 10. Variable cost is how much, my dear? 7. So you have a contribution per unit of how much? 3, right? 3 per unit, no? Into number of units. How much, dear? So how much you will have? So this is my total contribution. How much is my fixed cost? Yes. Am I supposed to minus interest now? How much is the interest? 10,000, that is total debentures which are being raised at a rate of, so that should be 1000 rupees. Minus tax at a rate of 50%, very high tax. Is there any preference shares? No. Can I write this as EAT for equity? That's here itself. Number of outstanding shares is again 2000. My EPS would be 1 by 2, that is 1, 2, that is 1 per share. Yes, are we all good? Now the question is, you are required to calculate. I'm again repeating, we'll give you time to write, please understand. You are required to calculate impact on what? EPS because of increase of sales by 20%, right? So degree of combined leverage ka you have one more formula which says DCL. Let us first calculate DCL like a normal one. Okay, normal DCL is how much? Normal DCS is nothing but EBT divided by, oh sorry, contribution by EBT. Yes. So contribution is 6,000. Your EBT before tax is 4,000. So how much would be your this thing? 1.5 is your degree of combined leverage. Degree of combined leverage. There is one more formula for calculating degree of combined leverage. For the same thing you are doing, that is percentage change of EPS divided by percentage change in contribution. Yes, we know the change in sales will be the same change in contribution. Do we know this? So can I say even the change in contribution is 20%? Okay. Now let me just write. It would be how? New EPS minus old EPS by old EPS whole divided by 0.2. 20%, right? 0.2, which is already given, and on the left hand side LHS would be 1.5. You have already calculated. Are we all good here? Yes. So can I straight away say 1.5 into 0.2 is equal to new EPS minus 1? Why 1 1 1 1 everything 1? If you show that step also, they will do dundum to you. Okay. So how much would be your new EPS, my dear? How much is percentage change? That is 1.3 minus 1 divided by 1, that is equal to 0.3, that is equal to 30%. I believe answer got missed, but the answer is 30%. You can write down. Answer printing got missed for this problem. It is. Yes, very simple. Simple. Self exam. In the Institute Study Mat, if you go, you'll have questions divided into one they have given as an example, and one at the back after the chapter is closed, they will give certain questions. So it is from that questions. Sorry. Yes, test your knowledge pattern of your study material. ठीक है, make a note. Hello. Sir, 3B, right? Question 3B. Consider the following information for Omega Limited. You know, Omega is a famous, very good, watch brand, right? Yes. Consider the following information for Omega Limited. EBIT is 15750 in lakhs. So, are you supposed to write all zeros? No. Just mention in lakhs even in your answers also. I will tell you one peculiar point, but I will tell you at the once we solve this problem. Okay? Just remind me if I forget to. Then you have an EBT of 7,000. EBIT is given, direct EBT is given. Your mind should start working then that this fellow would not have given interest number to you. Correct? Fixed operating cost is 1575. Calculate the percentage of change in EPS if the sales increases by 5%. Done? Yes, again EPS. So you will say the combined leverage, he has not asked why you have put this question into the combined leverage section. Combined leverage is asked, but he has not specifically asked. Are sir, what mind games you are playing? Yes, it is this way. You cannot calculate the percentage change in EPS until unless you know combined leverage. Yes or no? Without combined leverage, how would you bridge the gap? See, there are two gaps: EBIT contribution, EBT, EBIT. So now combined leverage will take you directly from EBT to contribution. So this gap has to be bridged only by combined leverage, right? Yes. Can we do this? Simple problem, but this is some ICI ka. Sometimes I have seen in some answer sheets. Why so many students take classes from us. Obviously, not all the students will get desired results, and because they believe that institute has not done correction, so they will get for a certified copy. So I am going to discuss one of the certified copy. That's it. That because this problem was there in one exam. Okay. Omega Limited. Do we have to make this format for us? Yes. Answer 3B. Answer 3B. Right. First contribution. We don't know. Okay. Minus fixed cost. Do we know this? 1575. Then EBIT. Is it given to you? Minus interest. Again not given. Then EBT. That is 7,000. Yes. So this is a question mark. This is a question mark. Can you calculate this numbers please, which is there in the question mark? Easily you can do it by finding out BF, again balance sheet figure. So that means how much it is. Now similarly you can also calculate this one, because if suppose contribution minus fixed cost is EBIT, then EBIT plus fixed cost should be contribution. How much that should be there? Right. So this two numbers you have calculated by using. Can I have my DCL here? Easy to compute. Don't miss to write the formula please. You might be feeling yourself expert, but if you keep on writing formulas in the exam also, you'll write the formula. I have seen so many answer sheets wherein they have lost half marks to 1 mark. They have done everything right, but they have not mentioned the formula itself. Okay. Yes. Please understand, examiners who are there, they are going to correct your papers as per a marking scheme which ICI will give it to their examiners. In that marking scheme, it will be clearly written. If the student has written this point, give marks. If not, no marks. If suppose in their marking sheet a question is small like this and it's come for 4 mark, then pretty simple problem. How you would allocate mark? Then in that case, even formula writing will carry a mark. But in case if the problem is very big, like problem number 2A, and if that problem 2A comes for 4 mark, then even in that case, if the marking would be pretty simple. Each plan 1 mark. So that's why you cannot guess how the marking scheme would be. Nobody can guess. Even examiners cannot guess, and that is not a public document. That is not a public document. So that means you have to write all the steps. Are you getting it right? Okay. So how much is my contribution? 17325 divided by how much it is? Sorry, 2.4. Can I recalculate DCL please with your permission? Again, I am going to assume the percentage change in sales is going to be the same as percentage change in contribution. So my DCL is 2.475. I have percentage change of contribution is 0.05. ठीक है? Yes. Then I will not get into details of calculating EPS because the number of outstanding shares is not given. Okay, so I cannot find out how much is my EPS, so I will straight away write percentage change of EPS will be, and the percentage change of EPS will be the same of percentage change in EBT provided there is no increase in number of shares and no increase in taxes. Correct now? So straight away my percentage change of EPS would be 2.475 into 0.05, that is 0.12375, that is nothing but 12 point. Yes. Make a note. Simple. Sir, percentage change of EPS will be the same percentage change of EBT. You will say, sir, EPS is not given and we cannot compute EPS because number of outstanding shares are not given. So you can solve this problem by taking one assumption that number of outstanding shares are suppose say 1000. That way also you can do, or straight away if suppose there is no change in the number of outstanding shares, the change in EBT would remain the same of EPS, na? Correct? EBT, EAT and then EPS. If there is no change at EBT level, tax level, no change at number of shares level, so same percentage change will continue. So if suppose any change happens at if suppose 10% change happens at EBT, same 10% change will happen at EPS also. Done. Done, sir. E Question 3C. Similar question of 3B. Okay, one point which I told, I will explain you or I will tell you when this 3B was there. What happened is one of the examiner's book, I'm only telling you, maybe they have asked some numbers here, so he forgot to write in lakhs. As we have forgotten, even the student has also forgotten to write in lakhs, and he was punished by deducting his marks. Hmm? Not complete, but obviously there was a punishment, and that is obviously you will not like when, at least for this kind of mistakes. So be careful, right? Question 3C. The following data relates to RT Limited, EBIT 10 lakhs, fixed cost 20 lakhs, EBT 8 lakhs, calculate combined leverage. Very simple. We'll do it right away. Contribution, we don't know. Less fixed cost, that is given to be 20 lakhs. EBIT 10 lakhs. Minus interest, again not given. EBT 8 lakhs. So, how much would be my interest? 2 lakh. And again, how much would be my contribution? What would be my DCL? Oh, sorry. Make a note. Got it? Done? Yes. Firm's details are as under. Sales 100 per unit, right? That is 24 lakh rupees of sales. So how many number of units you have? 24 lakh divided by 100. You will have how many? 24,000 number of units are sold at 100 rupees. Variable cost 50%, that is 12 lakhs. Fixed cost another 10 lakhs. It borrowed 10 lakh rupees at an interest rate of 10%. Equity capital is 10 lakhs, right? And calculate operating leverage, financial leverage, combined leverage, ROI, and if the sales increases by 6 lakhs, what will be the new EBIT, right? Simple problem. Let's see. Yes. Now this kind of problems you can surely expect in exams, which will come for 4 marks to 6 marks or at least 3 marks at minimum. ठीक है? 4A. sales 24 lakhs less variable cost 12 lakhs, then you will have contribution 12 lakhs, then you will have fixed cost yes. Is the interest given? It is hidden, sir. So 10 lakh into 10%. Do they have information on tax? Do they have information on tax? So if there is no tax, can I use this as EAT itself? Right? Is it done? Yes. First answer DOL 12 lakhs divided by 2 lakhs. Make sure you write formula in your books. DFL, that is 2 lakhs, DCL 6 into 2, that is 12. So you have your first bit, second bit, and third bit. Done? ROI. What is ROI? How much is the return which we are generating? Total return which we are generating? Yes. For equity, EBT. But for equity and debt put together, we are generating a return of, again, for equity, we are generating 1 lakh, right? But are we also generating 1 more lakh for the debt also? So total for equity and debt put together, how much is the total return which is generated here? How much is the total return which is generated? That is at an EBIT level. That is at a EBIT level. So EBIT divided by investment. So investment has come in which form? Either only equity or equity plus debt. So that is equity plus debt. So that is 2 lakhs divided by 20 lakhs. That is, if the sales increases by 6 lakhs, what will be the new EBIT? Yes. What does he say? If the sales increases by how much, right? Correct. So how much we will be able to see a new sales? VC would be 50%, contribution 15 lakhs, fixed cost will remain fixed of 10 lakhs. How much is my new EBIT? 5 marks question, each bit 1 marks. Or it could be possible that last two bits are given 2 marks and then balance half marks or 1 marks, whatever scheme they want. Make a note. Okay, 4B. There is a balance sheet and P&L given to you. Let's see what this balance sheet and P&L tells us. Betatronics Limited has the following balance sheet and income statement information. Liability side mein you have equity capital 8 lakhs, debt capital 6 lakhs, retained earning 3 lakh 50,000, current liabilities 1 lakh 50,000. Asset side you have net fixed assets 10 lakhs and current assets of 9 lakhs. Okay. So this information of balance sheet will actually help you only two numbers. One, number of outstanding shares, one, calculation of interest. Okay. Now come down again, sales is given, operating expenses including depreciation of 60,000. Depreciation is fixed expense, variable expense. Fixed expense. EBIT, then less interest, you get EBT, less taxes, you get EAT. Are we all good? Determine the degree of operating, financial and combined leverage at the current sales level. What is current sales level? 3,40,000. If all operating expenses other than depreciation are variable, so depreciation is what? So that means you have to make an income statement again, right? Yes, only then you will be able to calculate operating leverage. If total assets remain at the same level but sales increases by 20% and decreases by 20% in these two scenarios, what will be the EPS at the new sales level? Are we all good? Simple problem, dear. 4B. 4B. Let's find out at current sales level. Sales less variable cost. Find out contribution. Less fixed cost. You will find out EBIT. Less interest. Found out EBIT. Taxes are also given. You find out your EAT divided by number of outstanding shares. You will find out your EPS. I believe that's your current sales numbers. 3,40,000. Total operating expenses 120, of which 60,000 fixed cost. So net 60,000 is only variable and 60,000 is only fixed cost. So you can add up 60 plus 60, 120, that matches there. Done. So we'll have 2,80,000 of contribution, which will reduce to 220 of EBIT. Again, you will have interest, that would be 10 lakh, correct? How much is the debt number? 6 lakhs into 10%. So that is minus taxes. So 1,04,000 is your EAT. Whereas number of outstanding shares with the balance sheet which is given to you, EPS is how much, dear? So this will become your old EPS. You have to find out two scenarios, right? So that scenarios it will help. What is my DFL? Oh, sorry, DOL. How much, dear? 2,80,000 divided by 220 is, again, I'm just cleaning this calculation. DFL 220 by 160, 1.37. DCL is equal to DOL to DFL. How much, dear? I'm just rounding off to 1.75. Do you want to do it by formula or do you want to rewrite it? Increase and decrease. Do you want to do it by formula or do you want to rewrite the whole table? Percentages? Okay. चलो yes, tell me. DCL. So change in sales is something similar to change in. So you have DCL as 1.75. So new EBIT you don't know. First we'll take positive change. Then after we'll take negative change. Old EPS, that is 1.3 divided by old EPS, whole divided by percentage change of contribution is 0.2 positive. So how much it will be? 1.75 into 0.2 is equal to new EBIT, no, it's a new EPS minus 1.3 divided by 1.3. So 0.35 into 1.3, 0.455. If you send this 1.3 here this side, it will become plus how much? New EPS is, so your new EPS in case the sales are increasing is 1.55. In case the sales decreases by 20%. Again same thing, 1.75 into negative 0.2 is equal to new EPS minus 1.3 divided by 1. Correct. So what would be the answer? Negative 0.455 plus 1.3 is equal to new EPS. So new EPS in this case is also point. हो गया simple. Make a note. 4C. Yes. What does it say? Calculate the degree of operating leverage. Calculate the degree of operating leverage, financial leverage, and the combined leverage. Yes. For the following information which they have given. Simple problem, right? They have given three scenarios: PQR, operate units, fixed cost, units of variable cost, interest expense, and selling price. Are we all good? Yes. Please make a write it down, sir. Give us the answers. 4C. PQR. Selling price, that is, then minus variable cost, you will have contribution per unit into number of units, you will have total contribution, correct, minus fixed cost, you have EBIT, minus interest, have EBIT. Yes, let's start doing it. P, selling price 3, Q, selling price how much? 25, and R, selling price 0.5. Then again variable cost 1, 7.5, 2, number of units 6 lakhs. Yes, very good. And this would be 2 lakhs, right? Fixed cost is again given to you 3 lakh 50,000, 7 lakhs. So last one is a loss situation. You have interest expense, how much dear this would be? DOL, contribution by EBIT, contribution by EBIT, sorry, that was 6 lakhs. divided by how much? 2 point. Similarly for the next one, then here it will be 0.6. So can you see it is operating leverage is getting negative or less than 1 only in the cases of loss. And it is very obvious also here denominator is more than the numerator, so it will come less than 1. Again DFL, so how much? 1 point. One point. Because there is no interest cost, so it will be 1. So DCL is simple DOL into DFL. How much? 2.3. 2.4 into 1.1, 2.64, right? Correct. Then 2.14 into 1.069 is 2.28. Okay, you can round off to 2.29, right? And this would be again negative 0.67. These are our answers. Make a note. Sign. So problem 4D. The data relating to two companies are given below. Equity capital 6 lakhs and 3 lakh 50,000. 12% debentures at 4 lakh 6 lakh 50,000. Output units per annum 60,000 1 lakh 15,000. Selling price per unit 30 to 50. Fixed cost per annum 7 lakh 14 lakh. Variable cost 10 75. We are required to calculate operating, financial and combined leverages for both the companies. Simple problem, sir. Again, same format, selling price minus variable cost, we get contribution per unit into number of units, you get total contribution less fixed cost minus interest expense. Leave one row blank so that you can do a calculation. You will get EBT. Is there any tax information? No. Company A, let's start doing it. 10 minus 7, 3 per unit, number of units 60,000. So we have 1,80,000 of total contribution, of which, oh sorry, it is selling price is 30 minus 10. Sorry, I have seen some different number. 20 into 60,000 would be 12 lakhs. Minus 7 lakhs. Then you have an interest expense. So let's calculate 4 lakh into 12%, that is 12,000, 48,000, 4 lakh. DOL is 12 lakh divided by 5 lakhs. How much, dear? 2.4. DFL is 5 lakh divided by 2.655. This is company A. This is company A. Done. I'm just parallelly writing company B. So how much is the selling price? 250 minus 75. So my per unit comes to, contribution per unit comes to 175. Number of units are again how much? Minus fixed cost of 14 lakhs. Interest calculation, dear. 70. So similarly, round of 1.07. Yes, write down. Done. For E, sir, annual sales of a company is 60 lakhs. Sales up to variable cost ratio is 150%. That means if variable cost is 2 rupees, sales is 3 rupees. So variable cost into 1.5 is sales. Got it? So this is also known as PV ratio generally. Okay. Fixed cost other than interest is 5 lakhs and company has 11% debentures of 30 lakhs. Calculate the operating financial and combined leverage. Only new learning here is that cost sales to variable cost ratio. 4E, sales 60 lakhs, variable cost not given, right? But a ratio is given to you. What does that ratio says? that sales by variable cost is 150%, that is 1.5, then variable cost would be equal to sales by, tell me sir, sales by 1.5, so that is 60 lakhs by 1.5, that is 40 lakhs. Yes, please make a note, very important. This is also known as PV ratio, reverse PV ratio basically, but same concept of a PV ratio. Done. Now the problem is pretty simple. You have to just minus fixed cost, interest, and then calculate all the leverages. Done. Okay. How much is fixed? How much is contribution? Minus fixed cost, then minus interest. How much? That is 11% into 30 lakhs. Done. EBT is equal to how much? 11 lakh 70,000 EBT. Yes. Let's see. How much it is? 1.33. Then DFL. Yes, and then DCL. That is 1.33 into 1.28, 1.7. Make a note here. There are two more problems. Then after that, I will show you the latest RTPs which is available on the ICI module, and let's see whether you will be able to solve those problems also. Done. Question 4F. P limited, Q limited, sales variable cost 500,000, 200, 300, contribution 300, 700, less fixed cost 150, 400, EBIT 150, 300, interest 50, 100, then EBT you have 100, 200. Simple. Calculate the operating financial combined leverages. Let's do it very easy. And then he is asking us which is more riskier. Jaldi jaldi kar do. You have become pro in this chapter now, na? Sales 500,000, variable cost 200, 300. So contribution. I'm writing it at little distance so that here side by side only I will show the calculations. 1000, 300, contribution 300. Do it here only, no? DOL 2, DFL 1 point, DCL again here 2 point, here 1.5. Next, so it is 3.45 whatever. ठीक है, make a note. Let us see one Nepal problem also. ICA conducts exams in, I believe, more than 30 overseas centers. I am not sure how many, but Nepal is surely a center. Nepal, Dubai, likewise they have overseas exam centers also. Not 20, maybe it's 5 or 10. They have more than 30 overseas chapter. But based on number of students who enroll, they allocate the exam centers. ठीक है, चले. So Nepal problem, sir. What does Nepal has brought for you? A capital structure of ABC Limited consists of an ordinary share capital of 5 lakhs, equity share 100 each at par value, and 5 lakhs 10% debentures of 100 each. Shares sale increased from 50,000 units to 60,000 units. The selling price is 12 per unit, variable cost 8 per unit, fixed expenses 1 lakh, income tax rate 50%. Calculate the percentage change in EPS that you can do by TCL. Calculate financial leverage and operating leverage for 50,000, 60,000. That also you can do. Only the last point, that is comment, you have to comment. Before we comment on the this problem, let us comment on the last problem. That is also asking which is more riskier. So company B is more riskier, in company Q is more riskier. In the previous problem there is a second bit. If you can see, comment on the riskier part. So company Q is more riskier. Company Q is more riskier. Chalo, last problem, sir. At least based on our material, it should be 4G. So there typed the wrong number wrong. Answer 4G only. In the revised version, you will get it at 4G. Yes, again, same format, selling price minus variable cost, you get contribution minus EBIT minus taxes, right? Are we all good so far? So at 50,000 units, at 60,000 units. 12 minus 8, 12 minus 8, correct? So 4 into 50,000 would be how much? And here it will be fixed cost stands to 1 lakh. Interest is at 5 lakhs at 10%. Taxes is at 50%, very high taxes. Done. How much will be DOL here? That is 2 lakhs by 1 lakh. That is DFL is again 1 lakh by 50,000. They have not asked combined leverage, only they have asked us this thing. But again, I believe you will require combined leverage because you have to see the percentage change in EPS. So the combined leverage here would be 4. Same thing goes here. How much is your contribution by sales? Oh, sorry, contribution by EBIT, that is 2 lakh 40 divided by 140. Sorry, 1.71. Then again 140 divided by 90, 1.55. The combined leverage is not required here. EPS and financial leverage in relation to increase. Oh, yes, combined leverage again because fourth bit will be required. Yes, how much it will be? 2.65. ठीक है. Yes. So this, एक second, this is my second bit and this is my third bit. ठीक है. Second and third bit we have got. Now we are supposed to do first and fourth. So this is B and this is C. Yeah. First A bit, it's supposed to be percentage change, and behavior of EPS is also, again, you can just find out the new EPS in both the scenarios. So new EPS, what is the behavior of EPS and behavior EPS operating and financial leverage in relation to increase in the sales from 50 to 50 percentage change. We can simply expand this example so that we can do A and B, need not to use formula. Okay. I'm just taking this. If you have done so far, I will extend down itself. Please let me know, have you completed it? So far, is it done? All of you? So, EAT is 25,000 and 45,000. No preference dividend, so divided by number of outstanding shares. So the number of outstanding shares are 5 lakhs divided by 100. So 5,000 shares. So my EPS here would be 5 and 9. So how much is my percentage change? 9 minus 5 by 5, that is 4 by 5, that is, this is my A bit. B bit, or the last bit, that is D bit. What does it say? Comment on the behavior of EPS operating and financial leverage in relation to increase in sales from 50,000. What is the behavior? A small change. What is, how much is the change? You have to write it in this manner. A percentage change of a percentage change of 20% in sales brings a 80% change in EPS. Therefore, EPS is very sensitive. Instead of using the word riskier, I am using sensitive to change in sale. Make a note. Here we end. Screen. I have recording this. I have accumulated all the question papers for last 2-3 attempts which were available on the ICAI. Now I just wanted to get through the whether you are able to solve it or not. Let us start with RTP December 2021. Let's see whether you will be able to do the leverages problem. This is a leverage problem which is given in RTP. You have to tell me whether you can solve it or not. Anyhow, solution is also there in the same RTP. Particular info relating to Navya Limited for the year ended 31st March 2021 is given. Output 1 lakh units at normal capacity. Okay. Units is given. Selling price 40, variable cost 20, 40 minus 20, 20, 20 into 1 lakh. 20 lakhs contribution minus 10 lakhs variable fixed cost. You have EBIT 10 lakhs. Then equity share numbers, reserves and surplus, 7% of debentures, current liabilities, the balance sheet they have prepared and gave it to you. What they want you to find out. Navya Limited decided to undertake an expansion project. You remember we also did one project where they take another 6 lakhs they have raised. Expansion project to use the market potential that will involve rupees 10 lakhs. So how much additional funds they require? 10 lakhs. The company expects an increase in the output by 50%. So new scenario is currently they have 1 lakh output. If they take up an expansion, then output would be 1 lakh 50,000. Fixed cost will be increased by 5 lakhs. So now fixed cost also will increase from 10 lakhs to 15 lakhs. That is only one new change which we are seeing. Any problem we have not seen fixed cost increasing. This is a problem you see fixed cost increasing, but again it will not impact because you know the 10 lakh or 15 lakh will be done. Any problem so far? We're comfortable to understand. Variable cost per unit will decrease by 10%. Your question, one of the student came to me during the break and said, sir, why do we take contribution same percentage change of sales as percentage change of contribution? Because we always assume variable cost will change along with sales. This is the first problem where they have given variable cost is decreasing. So as of now the variable cost is how much? 20. That will go to how much? 18. Decreased by, the important word here is by. If suppose he say decreased to, then now the cost is only 10%. Otherwise it is only by means now the cost is 90%. So it will be 18. So revised numbers please assume or imagine in your head. So revised sales goes like this: 20 into 1,50,000 minus 18 into 1,50,000. You get contribution minus fixed cost of 15 lakhs. You get EBIT. So far it is okay. Now interest will change if he raises this 10 lakhs by interest, or EPS will change if he raises this 10 lakhs by equity. Okay. The additional output will be sold at the existing selling price without any adverse effect on the market. So selling price is going to be 20 ka 20. The following alternative schemes for financing the proposed expansion plans are there. Again, 3 schemes he has. We have seen 4 plans. First, total equity. Second, equity plus debt. Third, entire debt. So you know how the changes will come. Same question 2A which we did, similar to that. Find out the above mentioned alternatives. Which would you recommend to the Navya Limited and assuming the corporate tax rate of 40%? Simple kada. Can you do it? Sure. Yes. So why I'm doing you, so that your confidence rises up कि भाई exam में ऐसे ही क्वेश्चन आ रहे हैं. ठीक है. Leverages हो गया. Now we'll go to one more RTP. May 2021 RTP will go. Again let us see leverage problem. Following information has been extracted from the accounts of a newly incorporated textile private limited for the financial year 2021. Can you see this? Yes. So what does he say? Sales is 15 lakhs, PV ratio 70%. That means sales into PV ratio is contribution. Profit by volume ratio. Okay. Yes, operating leverage 1.4 he himself gave you. So you have to do a reverse working, find out fixed cost. If operating leverage is given, DOL is 1.4 is equal to contribution by fixed cost. Sorry, contribution by EBIT. You will find out EBIT. You have contribution minus EBIT. Balancing figure would be fixed cost. Easy. Then financial leverage is 1.25. Again, you will be able to find out interest. Same process. Using the concept of leverages, find out and verify in each case the percentage change in taxable income if the sales increases by 15%. Taxable income means EBT, before taxes. Percentage change in EBIT, you can do it. In order to do this EBT wala, you can use either the table or you can use financial leverage, because EBT comes in financial leverage. And in order to do EBIT, you can use operating leverage. Calculate the percentage change in taxable income if EBIT increases by 15%. Three scenarios they have given. Easy to do. Easy to do. Simple. So that is how you build up your confidence. One more article we will see. Again, company P and Q are having same earnings before taxes. Can you see this? Yes, are having same earning before taxes. However, the margin of safety, that is break even. You remember break even, maybe we did one problem. Yes. Now what is the break even point? Where sales break even point, your profit is zero. So margin of safety means what? In that problem, if you remember, 20,000 was break even point, 25,000, 30,000 was the projected number of units. Okay. So how much was margin of safety in that problem? 25,000 if suppose is your sales, break even is 20,000. How much additional safety you have? 5,000. That is called margin of. Got it? Yes, we will learn this margin of safety ratio when we go to ratios analysis, but still you understand what is margin of safety? Actual sales minus BP sales, break even point sales. Done. If you wish, you can write it down somewhere. So however, the margin of safety of the P is 0.2 and for Q is 1.25, then that of P. तो P का कितना है 0.2, तो Q का कितना होगा 0.2 into 1.25, that is 0.25. ठीक है, तो एक चीज आपको समझ में आई होगी, इंस्टीट्यूट के एग्जाम क्वेश्चंस में और एक्चुअल क्वेश्चंस में कॉन्सेप्ट ज्यादा डिफिकल्ट नहीं है. So even in the institute questions also, concepts are same. Only thing is they are twisting with the language. If suppose it is a normal student who knows very basic, innocent student, he will say, okay, the company Q margin of safety is 1.25. Are baba 1.25 of P. So that is how the twisting of language is happening. Are we all able to understand this? Yes. So that means if suppose number of units which is been sold today is 1 lakh. So BP is how much? So the margin of safety is how much? 1 lakh into 0.2. So that is 20,000. Then how much is BP? 80,000. Total minus margin of safety is equal to BP. Ante kada? Right? So the interest expense of the company is 1 lakh 50. And for company Q, 1/3 less than of company P. Less than. So 1 lakh 50 divided by 1/3. So that is 50,000 less. So the company Q interest is how much? 1 lakh 50 minus 50, 1 lakh. समझ में आ रहा है आपको? Yes. Right. Further, the financial leverage of company P is 4 and company Q is 75% of P. 4 ka 75% is how much? 3. So company Q is how much? 3. So when you read question, you should have your answer sheet by your side. Then and there, okay, this. You will save a lot of time and most, matlab 50% of the question is done there only. While the reading the question, if you are able to understand, you can parallelly do it, right? Got it? ठीक है. Other information is given as below. Profit volume ratio, again same thing. Yes, sales का 25% is contribution. Company Q case में it is 33.33, that is 1/3. Tax rates is 45. You are required to prepare the income statement. खाली sales minus variable cost minus fixed cost minus interest minus tax, इतना बनाना है बस. That's it. Are we all good? Done. That is how we did in the class. How we did in the class. We suppose for an example, I am calculating interest. I am leaving one row below. You also do the same way. इतना छोटा छोटा वर्किंग नोट कहाँ लेके जाओगे? If suppose working note at least 3 line का तो working note होना ना. Single. This is only 1 liner working note. So your table expand your table, no. For each item you give two rows. One small working, one for the main answer, one for the small working, one for the main answer. Examiner is also happy. He do not have to turn pages. You are also happy because you do not have to do here because at the end of the day we are human. We might pick a wrong number from that page to this page while writing. I always prefer until unless the working note is less than 3 lines, don't show it as separate working. उधर ही space बनाओ उसके लिए. Then and there you make a space for it in the exam. Right? Are we all good? Done. देखो तीनों RTP you are so comfortable in doing. That is what the power of concepts I would say. Right? Abhi, let us go a step ahead. Can we see the question paper directly? But in question paper directly the answers will not be given. Matlab this question belongs to this chapter. We have to identify. Let's see whether we will be able to identify. This is July 2021 ICAI question paper. Okay, let's see whether you will be able to locate. We'll see only leverage problem. Okay, so first one is not a leverage problem. Second one not MM approach, no. RADR, no. Market value Walter, no. Pattern of finance, additional post tax cost of equity, no. Operating expenses, balance sheet. This is again ratios problem. Following ratios. Next chapter which we are going to do, that problem. Yes, machine, again capital budgeting problem. Right? Liabilities, we have EPS. Here we have it. कितने marks का पहले ये देखेंगे. 10 marks problem. अरे jackpot लग गया. Generally it will not come for 4 marks. This chapter is like 4 marks only. Jackpot लग गया. 10 mark का problem आ गया आपको. But one caveat. This is not, see, it might be a subbit. So you have to see 5. Is there any sub? Oh, whole section. Otherwise, Institute is very shana. You know how they will show their sense. In one question they will put 2 questions from different chapters. तो बच्चे को अगर एक चैप्टर आता है अच्छे से, दूसरा नहीं आता तो गया उसका प्रॉब्लम. You will not be able to do it. ठीक है, चलो ये करके दिखाओ. This is the exam problem. So crores में है, in crores. You remember in lakhs वाला. ठीक है. So company has following balance sheet on 31st March 2021. So equity share capital is 7.5 crores. Each share at 10 rupees. So total share capital is 75 lakh shares. Outstanding shares are 75 lakhs. Reserves and surplus 1.5. We will do this problem only if you tell me. If you are comfortable, हाँ sir ये तो चिंदी है तो we'll leave it. हाँ चिंदी means small. ठीक है. Or easy. So reserves and surplus is 1.5. 15% debentures is 15 crores. A current liability 6. Only 2 information is relevant for us. One is debentures ka interest and one is number of outstanding shares. Okay. So fixed cost per annum is 6 crores excluding interest, because interest we have to calculate from 15 crores ka percentage. What is 15%? Okay. Then variable operating cost, that means sales ka percentage is variable cost 60%. Total asset to turnover ratio. Now this is important. They merged ratios with the leverage. Instead of giving you directly sales, what they say कि sales is a ratio of turnover. तो पहला थोड़ा ratio का knowledge होना. तो total asset by turnover I will tell you, that is sales by assets. Right? Total assets here is how much? 30 lakhs. So 30 lakhs into 2.5 you have to do. So how much it will be? 30 crores into 2.5 you have to do. How much that would be, sir? 75 crore is the sales. Minus 60%. So please do it in your calculators. Eba karo. Huh? So how much is contribution? 30% crore contribution minus 6 lakhs fixed cost, 6 crores fixed cost, right? 24 crores, 30 crores divided by 24 crores. Operating leverage is how much? 1.25. Then if 24 crores minus interest, you calculated interest of 2.5 crores. 2.25. So 24 divided by 21 point, how much it is? 1.103. then combined 1.103 into, ठीक है, and then you will be able to find out EPS whatever minus taxes divided by number of outstanding shares. ठीक है, तो let us build our confidence. This is the suggested answer for the same attempt. Let's go to problem number 5. I believe that was problem number 5. और बा क्वेश्चन 3 चल रहा. हाँ ये रहा. See, total asset 30, sales 75 crores आ गया. Same thing we calculated, 1 mark. ठीक है, सी द टेबल. कहाँ गया टेबल? हाँ ये रहा. 75 crores minus 60%, 45 crores minus 30 lakhs, 30 crores, fixed cost 6 crores, then E 24 crores minus interest 2.25, EBT 21.75, tax 40%. आ गया. Yes, EPS 17.4, that is okay. 1.25 operating leverage you got, financial leverage 1.10, 1.379. 10 of 10 out of 60, not out of 100. So that means 15% in 2 days. Yes. So that is what the power of concepts are. Mathematics you can anyhow any day handle. That's the power of concept. एक और देख लेते हैं. Yes, ज़्यादा over confidence हो जाएगा क्या? Right. Let us see. Again we have to identify question. See, ratio is also coming for 10 marks. Huh? So that nowadays that means they are gaining weightage. So yesterday I told you I have taken weightage as per section wise weightage. So that means in current attempts these chapters are getting more thing because that is mean average of last 10 years I believe. तो ICA के पास तो पूरा 50 साल का रिकॉर्ड है, तो वो 50 साल का एवरेज मार्क्स है. वी आर मोर कंसर्न विद रिसेंट व्हाट इज हैपनिंग. ठीक है. सो ये रहा. Oof, this problems looks to be very 10 marks problem. Contemplating replacement, this is capital budgeting problem. Fifth problem, oh again 10 marks. Information of A Limited is given below. Earning after tax EAT is 5% of sales. So you should know sales. You will be able to find out. Sir, see the courtesy from the ICI. He already gave you the table. कि भैया तो इसी के बगल में लिख दे, मेरे को और कुछ नहीं चाहिए. Yes, table is given. No, so यहीं पे fill कर दो, आप काम खत्म. क्वेश्चन पेपर आंसर शीट के साथ स्टेपल करके इसको दे देना. See now, first thing is sales. So you need sales. Sales is obviously not given. So they will not give. They are dirty fellows. So now you have income tax 50%. Okay. So degree of operating leverage is given 4 times. So you will be able to find out fixed cost, and with the help of fixed cost you will be able to find out contribution. 10% debenture, again you will have interest, variable cost 6 lakhs, that is also mentioned here. Oh, बस इतना ही दिया है क्या? इतना ही दिया है सर. Okay. So let us start. Can you tell me how do we solve this problem? पूरा रिवर्स ही है ये, सीधा है ही नहीं. Yes. Tell me from where we should start. Only starting point is the main important point. First we have to see first item first. They say EAT. Can I write here? No, I cannot write here. 1 second. I will do a small hack. one second guys, print screen. ठीक है, I'm just putting it here. I see I will not, sir, I'm taking your permission to copy your question, please. Just for the benefit of students, I should have the question here. Now let's start doing it. करके दिखाते हैं. So sales. अरे चलो बाबा, क्या हुआ? हाँ, okay. Sales we don't know. Then less variable cost 6 lakhs. Contribution we don't know. Less fixed cost we don't know. ठीक है. EBIT we don't know, right? So something we know, I don't know what we know. So degree of operating leverage is 4, that we know, correct na? Degree of operating leverage is 4, right? Minus interest, do we know? Okay, how much is interest? 10% of 3 lakhs. 10% debenture in capital structure is 3 lakhs. So that is how much? 30,000. Can I calculate? Madam, I will not make a working note. I will do it here only. 3 lakh into 10%. ठीक है? At least I know something. So again, EBT, I don't know. Less taxes. Do we know something? Sir, we know only one thing, that it is 50% of EBT. That much only we know. ठीक है? Then EAT. That we know as a 5% of sales. Do you know sales? I don't know. Yes, all don't know. ठीक है? Any other information? DFL is also not given. At least if you would have given DFL, we know the interest, we'll be able to find out EBIT and EBT. मतलब एक अलग लेवल में है. So हम भी कम नहीं है सर, आ जाओ. ठीक है, let's take this as X. Right? So people who don't like mathematics has to love now. So contribution minus will be X minus 6 lakhs. Right? And this EAT would be 0.05x. Correct? And EBT would be, can we go up? minus 50% हुआ ना. ठीक है, वो 50% जो भी EBT होगा उसमें से minus 50%, right? So let's make a mathematical equation that EAT is equal to EBT minus EBT into 0.5. 50%, no, EBT का 50% is EAT, correct? Right? So now what is EAT? Is 0.05x. Then what would be the EBT now? EBT would be 0.5. So how much is EBT now? Yes. Point 1x. Are we able to calculate this? Do you feel like you are sitting in your maths classroom? Right? So this is 0.1x. This one you can put as a working note if you want, madam. ठीक है? So /1. First working note in leverages I am writing. ठीक है? Got it? ठीक है? So यहाँ तक आ गए. So EBT we have got. Now can we go above? We know already interest amount. So how much would be EBIT? Working note number 2. So EBIT again would be equal to, EBIT minus interest would be equal to EBT. So that if I substitute, then EBIT is equal to 0.1x plus 30,000. Is this equation okay? अरे बच्चों okay क्या? अरे why you are not enjoying the subject baba? अरे sir, we are enjoying like anything. So let me write down in X already. 0.1 x plus 30,000. Make this working note number 2. ठीक है sir. Now Clash of Titans. Why Clash of Titans? Sir, DOL is equal to contribution by EBIT. I know all the three numbers. Contribution kuda telusa sir maku. X minus 6 lakhs. EBIT also we know 0.1 x plus 30,000, right? And DOL also we know 4. So only thing what we don't know is X. So if you solve it, we'll get X. X is nothing but sales. Solve this equation. Point 4x plus 20,000 is equal to x minus correct. Oh, 6 lakhs. Oh, sorry, Baba, please. So it would be 7 lakh 20,000. Chalo. At least one problem we have done with working note. Done, Andy. So let me replace this x. Let me call this as 12 lakhs from working note number 3 minus 6 lakhs minus 6 lakhs. So how much is my contribution? Only 6 lakhs. Okay. Then EBIT, substitute here 12 lakhs. So 12 lakhs into 0.1 is, sorry, I'm just not erasing this equation because this is important equation. So it would be how much? 0.1 into 12 lakhs plus 30,000. So that is 1.2 plus 30,000, that is 1,50,000. And obviously this will become 1,20,000 and uske ऊपर 60,000 का tax, and I am able to verify my answer 60,000 and 5% of 12 lakhs is also 60,000. So my all calculations are right. So I have internally corrected, and now once I go back after examination and mark myself, I can give full out of full because you have verified your answer in the examination itself. Only fixed cost is left out, that is 6 minus this, that is 4,50,000. Thank you. Right? So anything else what they have asked us to? So first thing ये हो गया, financial leverage, combined leverage you can do, earning percentage change in earning per share if it is changes by 12%. Easy, no problem kada. Okay, yes. So are we on this seventh heaven? No. 10 marks. 7 hours, 10 marks. Thank you guys.